Hello, my name is Russ Fitzpatrick, and I'm going to be your works partner here for a little bit of time as you get certified as a renovation real estate professional. I've been doing this for 37 years, and I've been in the mortgage industry for about 20 years, so I've got a good perspective on both the lending side and the residential real estate side. And I want to tell you that you can add a lot of volume and a lot of differentiation in your market if you just let the public at large know that you're a renovation real estate professional. I want you to think back to the beginning of home and garden television when Chip and Joanne Gaines were just starting out at Magnolia Realty. They were not a nationwide phenomenon. Joanne Gaines was not America's sweetheart. They were simply real estate agents that combined their passion for renovation and their passion for real estate. And I'm going to invite you today to get to know certified renovation lenders and certified renovation real estate agents, not because I believe that the lion's share of your market is going to be renovation projects, but I believe wholeheartedly after 37 years of selling real estate, and I still run a brokerage down in Southeast Florida, that you can differentiate yourself in a much more professional degree. You might just realize that you raise the right eyebrow of your prospective clientele when you stand out from the sea of sameness. And sometimes I'll present renovation options at the first substantive contact of a buyer relationship, and they light up and they're like, yeah, I would consider doing that. Or they shut down and they say, no, I wouldn't consider doing that. But either way, your job as a real estate professional and certainly as a mortgage lender is to expand the options that your client has in front of them. If they call you for a 3-2 with a 1-car garage and you found them 4 threes with 2-car garages, you're expanding their options. If you find them renovation projects where they can get a loan for the full amount of the house and the amount of the repairs and have a contractor handle all the repairs, close and have one mortgage payment, you're expanding their options. So we always like to say, expand your client's options exponentially, and you'll increase your volume exponentially. I want to shout out to our partners at the Hero Benefits Network and draw your attention to America's nonprofit essential employee relocation company. I'm on the board of directors for this nonprofit 501c3. You're looking right now at the Hero facing site with 9 categories of employees that benefit from rewards and relocation grants provided by herobenefitsnetwork.org. The website herobenefitsnetwork.org is your portal as a realtor or a mortgage banker or a title agency to get involved with this nonprofit movement that is helping essential employees, first responders, and veterans move all over the country. So if you want to get hero ready and get in front of some of these domestic migration phenomenons that are happening, where early retirees or even career changes are allowing for these essential employees, first responders, and veterans to move to avoid the home ownership affordability crisis that's happening all over the United States of America, and maybe relocate to a smaller town where they're teaching in the community that they live rather than driving 45 minutes or an hour to get to the school that they teach at or the law enforcement office that they work at. So we've been doing this now for years and years and years, and we have an opportunity to extend it to you through that nonprofit 501c3. So make sure you visit our friends at herobenefitsnetwork.org. Little disclosure at the beginning of the renovation real estate certification. Each real estate transaction is unique, and you don't want to delve into renovation real estate without a tremendous amount of due diligence. Renovation real estate, even for a primary residence, involves risk. Even if they're not doing it as a investment per se, they still need to know the steps of the renovation real estate transaction, or they could get in over their head. If they don't bring in professional consultation, roofers, you know, septic tank people, if that's part of it, plumbers, electricians, and they try to go it on their own, it does involve risk and they could get in over their head. The next disclosure is it is the lending component of a 203K or a home style product are complex instruments. They require more due diligence and a little bit of professional guidance. So if you need a closing in 15 to 30 days or 15 to 25 days, I don't necessarily recommend going into a transaction with a 15 or even a 30-day closing, really. These aren't quick closings. These are not built for flips. This is when you have a home that needs renovation, that's been sitting on the market for a while. Write a 2-month closing. Write a 45 to 60-day closing, and you'll be comfortable getting in all your due diligence during the first 10 or 15 days, and then normally processing the mortgage. But you've got to build your due diligence into the time frame. So that's a disclosure. Renovation real estate mortgage transactions will require experienced professionals. Sometimes you'll need to insert a HUD consultant. In certain HUD lending situations, you've got to bring in a consultant to oversee the entire thing. In others, you just need licensed contractors. But be sure you're working with be sure your clients are working with a renovation realtor and a renovation lender. And that's what this time together is all about. But before I go on, I've done dozens, literally, of renovation projects. And I've used renovation lending as part of my, they always say use other people's money, right? It's better. And when you're borrowing money at, 5, 6, or 7% interest rates, it's better than using your credit cards at 18, 20, 25, or 30% interest rates. So I think renovation lending can be rewarding and fun, and renovation real estate in general, even for customers that are using their own money, can be fun and develop instant equity. I want you to hear those words and say those words to your client, instant equity, and know what you mean by that. I have a veteran right now buying a home in Orange Park, Florida for $225. The repaired value estimate is $335. That's $110,000. And we're going to probably spend about 40 grand on all the renovations that he's looking to do. So you're talking about a family that will walk into their house with $60 or $70 or $80,000 in additional equity when they start the transaction. But what this is like for you guys as realtors, or if you happen to be a lender listening in that's not experienced with reno, the world is full of rundown, distressed, abandoned properties. And most of us as realtors are inclined to not go show those houses. That if a house doesn't have a roof, it used to only be available to cash buyers. If a house didn't have appliances, it was only available to cash buyers. When I was selling real estate 80s, 90s, and 2000s, you could not buy a renovation project with an FHA loan. You could not buy a reno project, a major renovation project with a VA loan. And you certainly couldn't use standard conventional products to finance houses that weren't going to appraise or were going to be they were going to be deemed functionally obsolete. They're no longer useful homes, right? They're off the main track for lending. So a lot of those get-rich-quick videos that used to be late-night TV were about buying rundown homes and fixing them up. But those were really fibs because you couldn't get a mortgage to save your life. Now, you can take out an FHA loan with 3.5% down payment, even if the house has no appliances, even if the house has a leaking roof, no AC, even if it needs TLC, things like flooring and paint and kitchens and baths. So, this opens up a tremendous amount of inventory for that handyman special fixer-upper. I mentioned Magnolia Realty and Chip and Joanne Gaines. Their old show was called The Fixer-Upper. You've got a passion and a conviction building as a certified renovation realtor. The terms fixer-upper, renovation handyman, just a little side note, on my first substantive contact with a buyer, whether it's at an open house or whether I'm on the phone, taking a lead off of the internet, I'm always going to bring up, have you ever had any experience buying a foreclosure? Have you had any experience buying a distressed divorce property, or maybe a handyman special, maybe something that needed a little work? Because I want them to express to me what their temperance is, take their temperature on if they would even consider going down the path of creative imagination. And that's what it takes, guys, to be a renovation real estate professional. It takes creative imagination, and then back that creative imagination up with professional clauses in the contract that protect the buyer, but then also back it up with contractors to come in to tell you the truth about how much things are going to cost or what the downside risk is to a certain situation. So you don't have to be handy to buy a handyman special. Now you can do an FHA 203K loan or a home style renovation lending product. These are government insured products, just like your standard FHA, VA, all of your conventional loans. You can get a product that's a standard QM product and still get the money you need to make that house on the right look like a new home, really. You just need creative imagination. You've got to get professional guidance even before you write an offer. If you know the house needs a lot of renovation, it's been sitting on the market a little while, yes, you can write a contract. I'm a realtor. I would write the contract with a contingency, and I would ask for a little extra time. Hey, I need 10 days in my inspection clause because this house is in such disrepair. Protect yourself with the appraisal contingency. Obviously, say if it's got to appraise for this or I can't move forward. Protect yourself with an inspection and repair clause. That's what the due diligence period is for. Now, on many renovation lending products, inspections are not required, but you want to use the due diligence period in your contract to get all the time you need for the buyer to inspect and get estimates and make sure that they're not going to get in over their head. Just don't rush. One of the first things we talked about in renovation lending is set your closing up for 45 to 60 days. Use the 10 days at the initial period of the contract to get all the inspection and repair estimates together. And as long as you're not putting yourself in a rush and you're not and you're over promising and under delivering to your seller, don't do that. Say this house is going to need renovation, so we're going to need a little bit more time to understand if and how we can buy it. But you can still wrap it up with a contract with a 10-day inspection clause and know that you've got an out for your buyer if the transaction gets too heavy lifting. But I know they can be rewarding and enjoyable, and they can produce instant equity. If you have any questions at all about anything we talk about, you can email me, the bottom right-hand side of your screen, russ@bdmx.com. If I ask permission, I might post your question and answer on online on our Works Partner website or on our Hero Benefits Network website. Renovation real estate case studies. This was a real deal. $107,000 purchase price in the worst rundown house in New Orleans that I'd ever seen. Fortunately, because it was a stick-built home and it wasn't a very complex property, we put some new siding on it. We put some new floors in it. We dropped some mini splits in it. We put a new custom-built kitchen, which was very small. I think it was a $5,000 kitchen renovation. And together we had about $65,000 into the property. We did hold it for almost 3 years because the the house was in the community where one of my daughters went to college. So we did this as a family project. We bought a rundown house. We put $65,000 into it, and we sold it for $285,000. But we didn't flip it. We kept it, and we held it, and we lived in it for the period that my daughter was going to college, and we had a lot of fun in New Orleans. So just a great example of how you can be profitable and responsible. Believe it or not, that's me up there doing the cleaning the bricks on the brick fireplace, and that's my daughter there that was going to Loyola University, putting together the kitchen cabinets. So this was a family affair. This was an opportunity to work together with our family. And when you share these ideas with your buyers, you're doing nothing but expanding their options. And I think expanding their options monumentally is the job of a good realtor. We did sell that property for $285,000, and the finished product, it was a showcase inside, and we did a lot of cute staging things with exterior lighting and redid the bathrooms, and we had to make closets out of shelves with barn doors on them, but we made it work, and we redid that floor. It was a historic old pine floor, and it was all redone within the scope of that $65,000 capital investment that we did. I did not pick that purple color. That was my daughter's. She's a little hippie chick from Loyola, and she liked that weird colored blue, and that's what we ended up doing on that house. But it did sell profitably when she was done with college, and it saved us lots and lots of money from paying for expensive dorms and expensive apartments all around New Orleans. Here's a product that I live in today. Believe it or not, we did enough work to this one over the years that we stayed in it. When we bought it, it was a rundown, pretty much an abandoned cabin. We initially only put $30,000 into it, and the realtor friend that we have in town felt like just the little bit of repairs that we did would have put the equity at about a $60,000 instant equity position. Now remember, we weren't doing this to get rich on one house. We were doing this to invest in a North Carolina property that we could renovate over 4 to 6 months. And this one qualified as a limited reno, which means you don't need all the oversight and all the inspections and consultants. You get a $35,000 limited renovation loan, or you can use your own money. But either way, the clients that I work with as buyers, most of them fit into that cookie cutter picture that they don't want to get involved in a renovation project. But many, 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 in fact, most, I would say, appreciate the fact that I brought up handyman specials and renovation products and rundown houses or distressed properties as an opportunity, whether they're looking at foreclosures or divorces or probate cases or abandoned houses or vacant houses. There is renovation real estate all over America, and in your market, I'm sure those are the houses that sit on the market a little longer than most. But with this particular product, we were able to borrow $35,000 with the original loan, and that became, now we live in this house now, believe it or not. We've expanded 4,000 square feet of deck, put in a built-in jacuzzi, added central air conditioning and heat, really beautified this kitchen, and the whole experience has been absolutely unbelievable. We have probably a $400,000 appraised value on it today, and that's the mountain house that we didn't even really intend to live in. We thought we were buying it as a vacation home, but we loved it up here so much. Now, you don't have to go far, and neither do your clients have to go far to get a good education on renovation opportunity. if you study HGTV, I think 3/4 of the shows are about renovation real estate. And you just ask your client, ask your prospective borrower if she's ever watched HGTV. Has she ever seen one of those renovation real estate shows, and would she consider taking a look at it? One last caveat on this, and I'm sorry if I'm being redundant. Of course, it builds rapport. Of course, it builds credibility. Of course, it builds rapport to just ask the question. Not asking the question stagnates your rapport, your credibility, and their options. It's asking questions, thoughtful, open-ended questions that will, build a relationship with that client. So make sure you're asking them about renovation lending. One of the reasons it's so important to look at renovation today is there's not enough move-in ready homes. Yes, in this calendar year, with the higher interest rates and inventory coming back, we are seeing a transition from a strong seller's market to a little bit more of a buyer's market in many areas that we serve. Maybe not yours, I apologize, but in a lot of the areas that we serve, the inventory is starting to sit a little bit longer. But the truth is there's never enough move-in ready homes, to expand their options so that they could renovate to their dream home rather than get stuck in someone else's design, and ultimately the idea that they could create instant equity. One of the most important advantages I see, especially at the first substantive contact with a lead or a consumer, even at an open house or an internet lead or a sign call, is you can shine. You can step out from that sea of sameness in that normal realtor that just, doesn't even think about their client's needs, is really just wants to be a clerk or an order taker. You can really differentiate yourself and become a subject matter expert, a guru status realtor, if you have the answers and present those solutions. So it's all about expanding your client's options monumentally, exponentially expanding their options with more houses to look at. These are projects that have been done with renovation lending in the companies that I've worked with over the years. And we were part and parcel to training all of the MLOs and realtors about these projects for years and years and years. And the before and afters are staggering. They're just getting ready to lay in the new driveway there on that house. And they did all new siding and a new roof. I don't even think they replaced the windows on that. But the most simplified definition of what renovation loans are, it's just about simply purchasing a property or refinancing your current mortgage and rolling the costs of the renovation or the rehab all into one loan. And I'm going to explain, if it's not obvious by that a HELOC is usually going to be at a higher interest rate. A credit card is going to be at a higher interest rate. Borrowing money on a second mortgage is usually at a higher interest rate. But in this instance, with the increased equity position on so many houses, or the amount of equity that's available in a renovation real estate project, the lender can justify lending the purchase price, let's say at $350,000, and an extra $75,000 to do the rehab. So you get one mortgage payment at one interest rate rather than going to your credit cards, going to Lowe's, going to Home Depot, or taking out loans with your AC vendors or your roofers. You can actually do the project wrapped up all into one beautiful first mortgage product. So why should we use renovation loans? Because of the instant equity. An example we just gave you was a little different than this one, but purchase price $355,000, renovation budget $34,500, which qualifies for that limited. That product used to be called Streamlined, but now it's called Limited. This was mainly cosmetic. appliances, doors, no structural damage whatsoever. But to buy the place for $355 and get the other $34.5 available to them. Now, they only netted an equity creation of $10,500 on a conservative estimate. I mean, today that house is worth 6.5, but this project that we did with this family, only netted them about $10,500 in instant equity. But compared to what they would have had they just took out a normal mortgage, this is above and beyond their down payment equity that they created. Example 2, this was a real purchase at $435. They did a regular 203K and they ended up with $66,400 for an after improved value of $535,000. The instant equity created there was close to $34,000. They added some outdoor living space and some functionality. And that's what gave them the joy. That's what gave them the pride in ownership. That's what made the new owner happier with the aesthetics, with the outdoor living space and the additional functionality. I think this one right here was the one where they enclosed their upstairs attic and they made it a loft, and it was a beautiful addition, and it fell within that $66,400. On affordable housing, you can really do a lot of things for a family that might be financially, an FHA buyer that has 3.5% down. They might not ever have been able to come up with that extra $15,000 or $20,000. In this case, their payment went from $828 a month for a brand new kitchen with all new appliances to $903 a month. I mean, it was better for them to finance that into their first mortgage at that low interest rate than it was to pay for it out of pocket. This was that upstairs attic that I was talking about, where it had this, architectural, design of the peak of the roof in it. And the family that owned it before never did anything with that square footage. But for $100 a month, I think it was extra, maybe that part of the repair, was going to cost them very little money in their mortgage to affect great dramatic change and value to that house. So again, if you ever want to talk about this, I'm also available to talk it through for you. I am 20 years in the mortgage business and 37 years in the real estate business, and we're available to help you. Just email me and I'll get right back to you. And if your questions and answers are appropriate and you approve me to put them on social media, I'll do that with your permission. $1,701 a month or $1,901 a month? Which one would you rather live in? If you were going to rent the house on the left, you might be paying $1,700 a month. If you were going to rent the house on the right, you might have spent $2,200. So, I'm not talking about rental here. I'm talking about buying these homes and getting the money to put the new siding on, put the new windows in, put the new front door on, and make the house look presentable and pass muster from a standpoint of livability and experience. And a lot of times with these older houses, especially in neighborhoods where houses can get 70, 80, 100, 120 years old, a lot of the renovations are woodwork, siding, maybe windows, maybe doors. Structurally, these houses have good bones. In fact, there's a show on HGTV that used to be called Good Bones. I don't know if they're still on, but that's what this is all about. It's finding a property with the square footage and structural components that excite your consumer, but then showing them through some creative imagination how they might be able to finance the renovation of that home into a whole new product and sell it for a heck of a lot more money. So this was about a $320 a month upgrade that they did to this house, and the interior and the exterior just changed dramatically. So now we have to get down to brass tacks, and I want to talk turkey with you. The myth about the auction and foreclosure market, the myth about the distressed property market is that it's reserved for cash buyers, so only the rich can get richer. Most of the banks now and mortgage servicers are actually incentivizing owner occupied buyers. So even when you go into the REO departments of the United States of America, you'll see, they release it for a certain amount of time on the market looking for an owner occupied borrower. And I was fortunate enough to recently sell through Hero Benefits Network a teacher, an REO property that was reserved for owner occupied. And it was a wonderful transaction for her, and she netted tremendous instant equity. And to do that project for a teacher or a first responder or a police officer through the Hero Benefits Network is just another level of goodwill in the marketplace and establishes you as a premier player in that marketplace. So the fact is that most of them do incentivize owner-occupied buyers. But even if it's not an owner-occupied buyer, you can still make, if you're a primary resident borrower, you can make a standard FHA, VA, or conventional mortgage application. So you can still make a normal mortgage application and then talk to your lender about doing a Renovation 203K product on it, and you will get the green light to add some revenue to the purchase price. You still write the contract at the purchase price that you're purchasing it, but the 203K loan is written for a higher amount. You can still work with any realtor in the country, so they don't have to switch realtors as long as the realtor's in the know about it or works with a renovation lender that can walk them through the steps. You can look at active listings in the MLS. You can find estate sales. You can find probate cases, and divorce liquidation is really big. There's also a huge market of government and bank-owned houses for sale. And you're also allowed to participate in live auctions depending on the terms of that individual auction. But we use auction.com and several sites to find properties for our buyers, and we're paid commissions and or negotiate a commission with the buyer on that. But it's not just for REO bank-owned properties. Think about the distressed divorce and estate sales, and think about the abandoned vacant homes that are all over your marketplace. So this is for the exam. There's a short exam, and we're going to cover some of the salient points that you need to be familiar with if you're going to go down this path. An FHA 203K limited renovation loan will provide up to $35,000 at the time of this certification. They change that periodically. It goes up from time to time. You don't have to hire a HUD consultant, and they will pay out 50% of the $35,000 5 to 7 days after closing, and then they'll pay out the balance of the $35,000 when the project is complete, so that you can float a Lowe's credit purchase, or you can float a handyman invoice or something like that until the second half of the balance comes out. Those projects need to be done within 6 months or less. That's the terms of the contract. But they could include septic. And I want you to remember that, because one of the questions on the quiz is going to say, are you able to include septic? And remember that limited is usually non-structural. So a fixer-upper for $285 and take out a $30,000 or $35,000 renovation budget. That's kind of where this is at. On a $500,000 house, if you just needed flooring, or you just needed an appliance package, or you were looking for, maybe an outdoor kitchen or something like that, you could do an FHA 203K limited up to your county's FHA limit. So these are government lending products, and they have stipulations in them. When writing a contract, write the contract for the purchase price only. Do not include the renovation budget. So you write the contract for $285, and then you submit your application to your mortgage lender for the 203K product. It's not too complicated in the Renovation Limited products. Now, standard FHA 203K and standard home style, you can get much, much more money. But there's some challenges for that. You have to plan on it taking a little bit longer. And I want to make sure that you know that this is not a quick kill. This is not for your flip investors. This is for a property that's been sitting on the market for a little bit, that you have the time to write a contract, right? You write a contract and then you spend 10 or 15 days going through the process of what's called a HUD consultant. And they will put together with your borrower a specification of repairs. So you can do tens of thousands of dollars, but it comes out in draws, right? There's 3 draws, 4 draws, 5 draws to get the money out as the repairs are being done. So you've got to work with contractors that know that they might have to wait a little while to get paid. And if this sounds too complex for you or annoying, I'm sorry. There are some steps that you have to go through when you're going to get a loan on a $400,000 purchase, but they're going to lend you $500,000 to do the repairs, right? So those work is usually to be completed in 6 months or less as well. And anything in orange on your screen, it's important that you catch. This is not for an FHA 203K limited. They won't go that high. They'll stop at $35,000 on a limited FHA 203K. So you can see how they built one product to keep it fairly simple, and then they built another product if it's going to be structural repairs and or bigger dollars. That's when you have to bring in a HUD consultant, and they build out the specification of repairs, and your lender would have access to a list of HUD consultants in your market. So a couple more facts. 3% is the minimum down payment for a first-time home buyer on a reno product. 5% if they're not a first-time home buyer. So you could still buy a reno project as long as it's your primary residence. If your client wishes to finance 80% so that they can put a full 20% down, they can avoid mortgage insurance, and they can also opt out of escrows. Once they go 20% down, there's not as much restrictions on them. Reno lending opportunities do include primary, secondary, and investment properties. It's just different products for different parameters. Those lower down payment purchase opportunities are going to be for primary residence only. You can do your secondary or vacation home, and you can certainly do investment properties. When you get into renovation lending, you can build a pool. You can also build one of those fancy Bobby Flay outdoor kitchens. You know what I mean? You can spend money on luxury items through renovation lending, and you can buy investment properties with renovation lending. So if you're looking at a duplex, triplex, or quadplex, you can do a reno loan on those products. So on a 203K limited, you wouldn't be thinking roof, HVAC, water damage, because it would probably be too much money. Remember, the limit is $35,000 currently with a 203K mortgage. So that product used to be called Streamline. It's now called Limited. FHA 203K Limited limits you to $35,000. Now that veteran down in Orange Park is got a roofing quote. I think it's a $15,000 roofing quote, and it will be okay inside of his 203K limited product because there's not a lot of water damage or anything like that. It just needs a new roof. Remember, for the quiz, when writing a contract, do not include the renovation budget. Just write your contract for the standard purchase price that was agreed upon between you and your seller. And then when you get to mortgage application, that's when you let your lender know that you want to go with an FHA 203K limited, or if you want to do a full scope of repairs, right? There's a true or false question on your quiz. You might want to make a note of it. Scope of repair, or specification of repair, some people refer to it as, is broken down into 3 parts. It's kind of like good, better, best. The HUD consultant will say these repairs are deemed mandatory by the buyer and I. The house is not habitable without them. Number 2, these are the repairs that are recommended by me as a HUD certified consultant. And in consulting with the buyer, these are the ones that they're recommending. And then if we're getting over budget and we're starting to spend too much money, the HUD consultant is going to list some additional things that you'd love to have but are not mandatory and do not affect the livability of the house, so that the underwriter can compare and contrast the current appraised value with the future appraised value. And that's going to be done in coordination with a HUD consultant that's assigned to your file. You have to hire a HUD consultant to do this, and that's part of the cost of doing one of these. But the contractors can't be, paycheck to paycheck contractors. They have to be well funded, because they might not get paid for 2, 3, 4, 5 weeks. And in some cases, on the larger repairs, they might get a small stipend at the beginning, and they get paid out in the second, third, or fourth draw. So just be aware that it is a complex financial instrument, and the consumer needs to be well versed, and the HUD consultant will confide in the contractors what the rules of the game are, and they have to agree to those rules. It's not as hard as you think to pay for a roof in 2 draws, or pay for a siding job in 2 or 3 draws. There's a funny little question on the exam that you're going to take in just a minute. Contractors do need to be well funded. They do need to understand how they get paid, and they do need to provide references, but they don't need to own a backhoe. That's just a false narrative that was created, so that that multiple choice question on your quiz can work. So remember, don't need a backhoe. Now, one of the questions is, are renovation loans only for REO, bank owned? No. You can do them on 1 to 4 unit multifamily. You can do reno loans on a single family home. And the word yes is there with a star in it, because you can even do it to a mixed use residential commercial property. They will qualify for a reno loan, but not an apartment complex with more than 4 units. That is not possible. You cannot do more than 4 units on these standard reno loans. You have to go into some non-QM products to get an apartment complex mortgage on something that needs that much renovation. One of the points we made earlier, I want to just bring it back to your attention as we go into this quiz, is the septic is okay for reno loans. If you have a septic problem or you need a septic tank, you can wrap that into your reno. Like we did in New Orleans, we converted a multifamily back to a single family. So you can do that in renovation, and you can convert a single family into a multifamily. So the idea is that there's some duplexes or even quadplexes that might want to take advantage of the entirety of the square footage as a single family home. No flips are allowed. And one more time, say it out loud: no apartment complexes. You can't get a qualifying mortgage with an FHA or homestyle loan on anything larger than 4 units. Before we get into the quiz, I want to make one more small commercial for our partners at the Hero Benefits Network. They are a true 501c3 nonprofit. They gift your referral fees in part back to the borrower or the buyer. They also provide mortgage and title agency incentives and rewards for the buyers. It's I would say that most of you will say it's a lot like Homes for Heroes, but as a 501c3 nonprofit, this is America's only nonprofit essential employee relocation company, and they offer a lot of realtor coaching and best practice sharing, and it really does show you how you can integrate your real estate career into the fabric of the communities that you serve by helping the healthcare providers, the educators, ambulance drivers, EMS, EMT, firefighters, military and veterans, and law enforcement. And I'm going to just make one little commercial. If you think this is only for affordable housing, our friends at Berkshire Hathaway up in New Jersey just did a $2.5 million listing with a firefighter who listed their house for $2.5 million, and their relocation grant that came back from Hero Benefits Network was $24,000 for that hero who was relocating from New Jersey and moving to another home. So these are real deep discounts, incentives, and rebates in the form of a nonprofit relocation grant. Our relocation grants never have to be repaid. They never have to be, you don't have to pull credit. They don't have to qualify. As long as they're employed as an essential employee, first responder, or veteran, or active duty, look up more information at herobenefitsnetwork.org. I promise you, nobody in that organization has taken a penny out of that organization. I know the founders, and I'm on the board, and nobody has taken a penny out of it from this nonprofit. It's a fantastic philanthropy for realtors, title agencies, and mortgage bankers to get involved with. So I hope I didn't bore you too much with all the granular detail, but our goal is to get you renovation real estate certified. And as long as you know those simple 10 questions to the quiz, we will print you a renovation certification. And you can help your challenging buyers that can't find the right house. You can help those sellers that have a rundown property or a distressed property. You can teach your sellers and your buyers about all the opportunities in renovation, and even helping a seller understand that it's going to be easier than you think to find a borrower for this property because we have renovation. We're certified renovation realtors, and we can help you do this without you having to do the repairs. If you're a mortgage professional that's taking a peek at this for the first time, you can book a time with Russ on that QR code on the left and help you build a network of real estate partners. We always give before getting here. We try to create win-win relationships. And one last time for anybody who's online today, my email address is at the bottom right-hand side of your screen, russ@bdmx.com. That's Business Development Managers Multiplied, bdmx.com. We're all about business development, whether it's for the realtors or the mortgage bankers. And believe you me, I've shown this renovation real estate certification to many of my sellers over time, and it certainly serves as a differentiator. So if you haven't taken the quiz yet, go ahead and scan that QR code, and you can take the 10-question quiz so you'll get the certification from us right after you pass it. If you have a problem with the test, email me at russ@bdmx.com, and we'll help you out with anything you need. But go ahead and scan that QR code. We're going to sign off now. Thank you for your time and attention, and remember, the only sustainable competitive advantage in business, especially the only sustainable competitive advantage in the real estate business, is world-class service. And you've got to become the subject matter expert if you want to stand out from that sea of sameness. Thank you so much for being on, and it's our pleasure to help you be more productive in the residential real estate space.